The bubble is popping as the Fed runs out of steam. What's up, everybody? Welcome aboard to Bubba's Bottom Line. It is Sunday at US 30 drag strip. So what's up? And here we are. And of course, a lot going on. And it looks like the markets are maybe a changing. This first part of Bubba's Bottom Line will be brought to you by our partners at Family Farms, who, with us, we try to continue to educate the farmers on how to protect, save, and to get more out of their money and their crops. And of course, we've got a special event we're doing for them this week. So it'll be great to be back with them, although it will be virtual, but it'll be great anyways. In the meanwhile, so here we are. And of course, the top story still remains the COVID and the relief package and the stimulus. And of course, the good Dr. Fauci continues to move the goalpost. He continues to move what's going to happen. And I don't know about you, but I'm getting sick of all this stuff. I know those that want all this crazy stimulus love it because it gives them more of a reason to continue to print money. And, you know, if you don't understand what this is all about, okay, you know, it is not a government bailout. It is a taxpayer bailout. So remember and be careful what you wish for. Just like many of you are regretting your decision in November, you're going to find out that you're going to get more as they continue to put this money into the markets, because the free money, as we say every week almost, does not create growth and it doesn't create jobs. It does create laziness, okay? And of course, we'll talk about the minimum wage in our commentary later, but in the meantime, the systematic continuing of crushing of the small business is on. And of course, what we really know is going to happen if they continue that is business is going to be replaced by robots, and there won't be those jobs. Our biggest concerns here, because of the Fed's denial, okay, because of the Fed's, not knowing having no common sense. Let's put it that way, okay. The big story is that we don't have inflation. Really? Okay. I mean, lumber's at all-time highs. Okay. And of course, home builders are looking for a Fed bailout as well. Actually, they're looking for price controls on lumber. Okay. Now, again, what happened to the free market America? That's what I want to know. Okay. You've got, and now everybody's begging for something. Okay. Because, of course, obviously, prices got to go higher. But until the Federal Reserve changes their models, which are antiquated and so ridiculous, because, you know, there's no inflation. Oil, since the election, crude oil has doubled. Okay. The commodities have gone bananas, which means that everything you're buying right now is costing a lot more money. And, you know, we love how we don't count food or energy in the inflation curve when those are the two most items that get the most usage. Okay. And of course, as I tell you, if you don't believe there's inflation, go stop a farmer and ask them. Any business that's got to produce and export, or not export, but put out, they'll tell you the cost of putting those products together is so much greater today, because obviously the raw cost of goods is going up parabolic, and it will affect every industry. Okay. And again, so how they have the nerve to say there is not inflation is almost as dumb as anything I've ever heard of, because when you look at the entire model, okay, and you look at prices of things, and, you know, again, you want to count long-term stuff only? Okay, well, what about the cost of aluminum and steel? Okay, everything is rising because, of course, you know, money is shifting from the equity markets into more commodities now, because when you keep making cheap money available, you are creating your own problem. And this is why, once again, the bubble will pop at some point, because you cannot stave off a recession. You can pretend all you want that you're doing good, but you're really, all you are is burying the taxpayers. Because eventually, when this debt has to be made good, guess who gets to pay for it? We do. Okay. Now, of course, the bond markets are telling you that they want interest rate higher, and they're going to continue to fight with the Fed. And of course, the big benefactor of all this is the banks, especially because the people took off the restrictions on fractional lending. So, of course, they're now the spread, which is how banks make their money. They make their money between the Fed funds rate, which is 0, and the spread. The 10-year has gone from 1/4 of a point to 1.5 points. Okay, now that is still unbelievably low, but that is one heck of a rally in interest rates and one hell of a decline in bonds and notes. We'll talk more about those in the market report. But again, they are telling you that these interest rates are going up, and they're not. It doesn't look like they're going to give in anytime soon. You know, the one difference between an individual fighting the Fed or one market trying to fight the Fed, you're not talking about that. You're talking about the biggest market in the world, which is the fixed income market, that is bigger than all of them put together. Okay, they got plenty of bullets. They got plenty of ammo there. Now we'll see how it plays out. But of course, these battles usually spell a much bigger sign of trouble. Now, again, we don't predict tops and bottoms. As a matter of fact, we're still long. But at the end of the day, okay, you can see the warning signs that are flashing everywhere. Okay, everywhere that you look, there is a problem in the economy, from the lack of jobs to the lack of growth to, just keep naming them. In the meantime, what we're at real risk for here is stagflation and inflation together, which is, if you're old enough to remember Jimmy Carter, okay, that's what we had. Okay, interest rates at 19%. Okay, listen, I'd have a party if interest rates went to 19%. Okay, because I'd sell everything and put it in at 19%. But of course, this is a problem because we don't have enough growth. Okay, we have got no economy going right now. Yet, the inflation is here, even though nobody will admit to it. Okay, the same as you can't tell it's a bubble. If you can't tell it's a bubble, then you should not be in any business, because no matter what you say, the economy does not support what is happening in the world of finance. Okay, but of course, we've only got one thing to invest in right now, because they've prevented. So that's why you're seeing now the spread to commodities, because they are extremely strong trending markets. And when they trend, they attract a lot of attention. And that's what you're seeing, the growth here. But so lumber is doubled. And of course, as I said earlier, the home builders want the Fed to step in and control pricing. I mean, forget about controlling pricing. Why not? What is wrong with a free market system? That is the design of a free market system, to have asset classes price themselves. But when you have the interference, okay, that is very much one-sided, because 99% of the population, or 95, whatever percentage, cannot take advantage of these low interest rates. But you do have a lot of people that have overextended into houses that they can't afford because of the low rates. You've got home sales, brand new homes at unbelievable numbers. Okay, and I tell you all the time, you cannot continue to see homes move up at these ridiculous rates of speed. I mean, they're going up so fast that it's almost embarrassing. Okay, the numbers that they're moving, and of course that only creates more greed, more FOMO, more buying, and the next thing you know, will be once again so far dramatically over leveraged that there will be only one way to go, and that'll be a collapse. Now, again, markets have collapsed before. It will fix itself when it does happen. And again, we don't know when it's going to happen. Nobody knows when it's going to happen. Okay, but we saw the yield spike. We see the cryptocurrencies, although they got hammered a little bit last week, but you have to assume, right? If a market goes straight up, you have to assume there's going to be some pullback. If a market goes straight down, you have to assume there's going to be a rally, because that is the way that markets usually work. When they get too extended in one way or the other, they're going to reverse around. Okay, so cryptos, I think, look real. And of course, you've got the Fed and you've got all the central banks bashing the crypto space. Why? Because, if cryptos are going to be successful, which I believe that they will be, okay, the Fed will have no control. They will not be able to continue to adjust and fix and flood the money supply. The manipulation of the fiat currency system, one of the biggest hoaxes in history, okay, because all the fiat currencies that really created is nothing more than a Ponzi scheme, okay? That's including the Fed. I mean, it's all one big Ponzi scheme that is just a creation of artificial dollars, okay, that don't exist. So as you can see that's why they're so afraid, because if the cryptocurrencies really take off, okay, which I think they have a chance to, okay, that will really throw a monkey wrench into the plans that they have, okay? Because when you get to an independent currency that has no controls over it, in other words, nobody can create more as they do on a daily basis in all the fiat currencies, you'll see a much bigger problem. So, I think if you're looking to the Fed for guidance, they're clueless. Okay, the Fed is about first of all, Ron Paul was right. They should end the Fed, and why can the Fed not be audited? Okay, to me, that's a criminal in itself that they can operate like they do. I mean, basically, Jerome Powell is the most powerful person in the world because he controls the money. And I think something else that's kind of scary here is Bill Gates, okay, sucking up all the farmland, okay? Now, maybe that doesn't scare you. Maybe you don't care. But, he who controls the food supply controls everything, okay? So, unfortunately, the power is going into the very minority, which is basically their plan, okay? But not my plan. And that's from the destruction of a free market system, okay? And again, where's it going to end up? I don't know. But as I said, and I will continue to say, there will be another either revolutionary or civil war in this country, okay? I don't know when it's going to start. I don't know what's going to start it, but you cannot keep stripping Americans of their freedoms as we continue to see happen on a daily basis, because there will be a rise up at some point. This is not a third world nation, okay? And, you continue to let, the things get away, and you continue to, make it harder and harder for Americans to live, they will rise up, and we'll see. In the meantime, right now, the markets are going higher. I mean, although not last week, but we'll see what happens. Again, there's a lot of things going on, and I think one more big story of the week that I think is relatively new to most is the incognito space you can use on Google, which is supposedly private, is really not private. Okay, they are tracking the incognito as well, which is what it's not supposed to do. Okay, so you tell me how much information you want to give to Google and Amazon and all those guys. All right, they want it all, and they're going to find it, and that's the true problem that could really be problematic in the future. I won't be alive when it becomes a bigger problem, but this is not good stuff. Okay. That is, again, our privacy is gone. Okay. Our freedoms are being taken away. So, hey, enjoy it. And hopefully we will see some smarter and cooler heads prevail eventually. And we can avoid all this and just get back to running a normal country. But this has been on this path. This is not since Biden. This is not since Trump. This goes back, starting probably 30, 40 years ago, okay, as they started to grab more and more of their share. This is Bubba's Bottom Line. Todd Bubba Horowitz here. And, of course, we're a step out of a break. We'll be right back with my market commentary. Well, everyone, here we are. And, of course, just want to remind you, okay, about our brokerage partners. Now, as I always tell you, I have other brokers, okay, but the brokers we prefer for futures and commodities is the CTG Group, okay? And, it's funny, is I did a call yesterday and I was talking to some of the people. And, of course, the ability for CTG is they talk to you when you need it. They take care of everything. They're the only authorized letter of direction of my algorithms, okay? I use them myself for all of my accounts except for one, Okay, I do one my own hybrid, but in the meantime, so they trade 10 of my accounts. They do the letter of direction. They have the fabulous customer service. You get on the phone, you don't get the voicemail, and you know what else? They've got some great managed futures products too. So if you're interested in that space, check them out. You can reach them in Chicago. It's the CTG. It's actually Capital Trading Group is their actual name on a website, or you can email me and I'll send you their link. And of course, for equities and options, there is nothing like Tradier. Okay, Tradier is $10 a month. I mean, that is, to me, for example, Friday I traded over 5,000 contracts, okay, in the options. So, at $10 for the month, okay, versus 65 cents or even 50 cents a trade, what's the difference? Think about the dollars. But their service is unbelievable. Okay, when there's a problem, you can get somebody on the phone there. Then you send them an email, they'll answer right away. Other than I've seen at some of the others that I do business with over the years. And if you want, you have the option. You have the opportunity, if you'd like to auto trade our equity algorithm models, we can do that through Trader, and we also hedge through automation through Trader if you want. Now, nothing is required. Trader isn't required. If you want to go somewhere else, fine. We're just saying to you that these are our choices for us. And of course, Andy Heck's commodity report. We got a great webinar coming up with him next Saturday. We get some big changes to the technical report. It's already an unbelievable report, but we're gonna make some dramatic changes. But make sure we'll get out the invitations, and starting on Monday, tomorrow you can start to sign up for the webinar if you want. But it's going to be awesome, and I'm excited to do it because there's going to be some phenomenal changes. Of course, our high school program, don't forget it at Patreon, patreon.com/Bubba Trading. That is patreon.com/Bubba Trading. Let's get back to Bubba's Bottom Line and me, and we'll talk about the markets. Welcome back to Bubba's Bottom Line. Todd Bubba Horwitz here on Sunday, the last day of February the 28th. And of course, as we go into March, we've got a pretty nasty week. Now, it wasn't as bad as it looks, but again, it was pretty ugly. And of course, we're still long. We will change. I would say this. Okay, all the major indices were down for the week. They looked great until Wednesday, and then if you saw Wednesday, they got crumbled early, came all the way back and rallied. Then from that point on, it was it. Good, kiss them good night. And but on Friday, you had an interesting divergence where the Nasdaq actually closed higher, while everything else got hammered. But the Nasdaq got hammered late in the day as well, after being hammered early. So it's been what you're really seeing here. Okay, and this is why I'm going to make this statement. Okay, now we're still long, but I would say one down day in any market from here, and we will reverse. But some of the signs you're starting to see is consistently higher volume now. That could indicate a major trend change is coming, which could mean the end of the bubble. Now, we never predict that. We have to watch the price action. Of course, we'll use the algorithms, but there's a lot of signs out there, okay, including, as I mentioned earlier, the bond markets. Okay? Bond futures continue to get ripped and hammered. The 10-year rate at 1.5%, the 30 back over 2.25%. I mean, the Larry Kudlow calls them the bond vigilantes, but whatever you want to call them, the bond market does not want the Fed to continue to cut rates. And when you look at a market that has done nothing but go straight down in the face of $120 billion a month being bought by the Fed, okay, think about that. So anyways, we're still short both bonds and notes. Crude oil, no inflation, no, it's only doubled, and it continues to go higher, and we continue to be long. And another up week for crude. And look, when you let the crooks from OPEC in charge, nobody knows the troubles I've seen. Nobody knows how high these can go. Okay, I mean, crude could easily go back to 100 at some point. Okay, now as you know, I hate crude. I hate even long it, but obviously it's been a phenomenal trade. But overall, it's just another sign, right? And of course, then you go to copper, which if you looked at copper on Thursday and Friday, you go, oh my God, it's terrible. It still had an up week. Okay, it's still close enough to the all-time highs, not just highs, but all-time highs in copper. And you have to assume at some point there will be some selling, but for the week, copper was still higher, and we're still long. Okay, nat gas was lower last week. The weather has subsided. No surprise. You're going to get, that's going to happen when weather issues, nat gas is really driven a lot by odd weather events at the wrong time. And the dollar that we are now short, right? And we're still long natural gas, but it's a dollar that we're short now. Okay, it was up for the week, but it's really looks pretty pathetic. And to me, it looks like it's tracking to get to 88 cents. Okay. Now, again, I don't like that, but I mean, that's what the price action tells us. Again, I don't look at anything but what the price action says, and it says that it wants to go lower. Okay. So we'll see, what it indeed does, but that is would be what looks like to be the case. And, as we take a look at the grain markets, wheat was the only one that was a little bit soft, but it was, I think, virtually unchanged. Although some late heavy selling Thursday, Friday, corn and soybeans continue higher. And I would suspect that these are just another great buying opportunities. You remember that markets have to have, they used to call it backing and filling, but just remember, something goes up sharply or stays up nicely, and if it gets away from a smooth trend, it's usually going to pull back to the mean. That's, you expect that. And that's one of the things we talk about here at Bubba Trading all the time is be prepared, not surprised, because it's not a surprise when certain things happen. You should be prepared for them. And you can't have the right trade on all the time, but you know that it's coming. So don't let it affect you emotionally. Okay. And of course, the meats hogs continue to go straight up. But, remember, the hogs were much higher at one point in the last couple of years and got drilled all the way down to 39 cents. Okay. So the fact that they're back at 90 cents or 88 cents is just a nice rally. And it looks like there's a lot more room to go. And of course, cattle, fats, and feeders, okay, we're both down on the week, but both at support and both look great. And we're still long the entire complex. Okay. And, the softs, you've got cotton, which we are going to reverse cotton on Monday. Okay. Or tonight, maybe. We'll see. I don't think it opens tonight. So probably tomorrow. Okay. And of course, but we've been long, we've been long cotton forever. And OJ, it was lower and we're still short. Coffee, we had a reversal early in the week, and it was down at the end of the week, but it had the up there was so big, okay, that it was up for the week. Sugar had a little bit of a sell-off on Friday, and cocoa, which we have reversed and are now long. Okay, so we're now long everything in the space except for OJ now, and then of course on tonight, which I don't think they open it tonight, but by tomorrow we will be short. We'll also be short cotton. Okay, and look. But the values of these and the growth of these just tell you that there's inflation. No matter what the Federal Reserve wants to tell us, inflation is here. And so it looks to me, okay, and I think what we really want to watch for now, okay, obviously, typically, the beginning of the month, you sometimes expect some buying coming in. So I would suspect tonight we could probably open much higher. And continue, but I would say this to you, okay? If the market is getting ready to turn over and change trend, we would see a higher opening followed by a failure and probably a lower close. That would be a sign of a big warning. And I think what you want to start to watch for is the overnight action and then the reaction during the day, because typically, if we're getting ready to see a reversal, or if we are in a general downtrend, you will see rallies early and the sells will always come in late. Now, that's no guarantee, but that's what to look for. Okay, that's just another clue. It's just things that we look at to give you clues of what's going to happen. And of course, the other thing you want to look for is you want to watch the VIX, volatility index, not for, it's not a fear index, but it will tell you what the option markets are like. And volatility really did not have a huge participation in the late week sell. It was up, but it was not anywhere near dramatic. So, watch that. And of course, you've got the battle against the cryptocurrencies. And, listen, so Bitcoin got hammered. It's only at 48,000. I mean, come on, let's be real. You know that there's got to be pullbacks in markets. In the meantime, as our positions are, and again, we will, obviously, I tell you what they are every day, so you can know exactly what I have. And when they change, they change. Now there is some change in the equity side, okay, which is directly correlated, but because of the timing that they close versus the timing of the futures, and just full disclosure, we're short. We're not short yet. We're going to reverse the spiders, okay, and we're going to reverse the diamonds. Okay, so just so you know that would be like the YM and the ES, but those haven't changed yet, which tells me one more little, even a down tick probably would turn those over. In the meantime, this is Bubba's Bottom Line, Todd Bubba Horwitz, and we'll be back with my commentary right after the break. Bubba's Bottom Line. Well, everybody, we've got some great things happening, and of course, next Saturday, we got a great webinar with Andy Hecht, our partner, and of course, writes the Technomental. We're going to make some dramatic adjustments to it that I think that everybody's going to love. So if you want to get that link, you can pull it up at BUBBATrading.com tomorrow. And if you want, or you want me to email it to you, just send me an email at BUBBATrading.com. And of course, our other brokerage partner, which is Tradier. Again, equities and options. Now, we do have other brokers, but for equities and options, $10 a month, great customer service. I mean, they are really take care of the customer. And of course, we've got their APIs and have automated everything for those who choose. Nothing is required. If you don't want it, you don't have to pay for it. It's free. It basically comes with a membership. Okay. That's the bottom line. If you want to use it, great. If you don't want to use it, hey, look, if you're happy where you're at, stay where you're at. Nobody is forcing you to switch, nor you don't have to auto trade if you don't want to. That's entirely your decision. We just make it available because my job is always to make things easier for my members. And this week we've got a great event with Family Farms. Unfortunately, it is virtual, but it'll be fun. And it'll be fun to talk to the farmers and producers. And again, it's just my goal to help them help themselves, basically, because again, it's about being hedged and being protected. And ask my equity members, okay, that have been hedged throughout all this wild stuff, how happy they are to have been hedged. Okay, so just remember, it's about protection, and that's it. And of course, our high school program, if you want to give us a hand, as you know, I finance myself about 90% of it, and I do get some help from Patreon. But we're trying to get everything back in business and get time to ourselves ready. These schools still closed, so it's a problem. But it's patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. Let's get back to Bubba's Bottom Line, and of course, my commentary. Welcome back. It is Bubba's Bottom Line. It is February the 28th. And of course, my commentary is every week. I got something to bitch about, but I got to tell you something. Okay. It's amazing what we're seeing from the administration. And of course, Ro Khanna from California has made a statement that if a small business can't pay $15 an hour, they should be out of business. Okay. Now, first of all, that's a pretty ridiculous statement to make in the first place, okay? Because most companies, like fast food services, they cannot pay and have a full staff at $15 an hour. Because $15 an hour is not $15 an hour. $15 an hour, depending on the company, is somewhere between 20 and 22 by the time you get through with the FICA tax and all the other things that go along with it. And of course, workman's comp. So we can talk the big game. Okay, when you're sitting in your little glass office, okay, and not worried about the poor people, okay, and you're worried about how much you're going to scam out of this whole deal, okay, you can keep making moronic statements that if a small business, because I got news for you, here's what you're going to see. If they get this $15 thing through on this stimulus, which is so far there's still a big battle, but you're going to see all these jobs that are 12, 13, 14, whatever they're paying now, okay, from 10 to whatever. All these jobs will disappear because you will see nothing but one or two people in any store, and everything will be automation. And if you don't think so, okay, check out a couple of McDonald's that run with 2 employees, okay, because the whole ordering process is off of iPads, and there are kiosks like there's the one I'm talking about. There's 7 kiosks for people to line up and order it, okay, or Domino's Pizza, which has the ability and equipment, and Little Caesars, to make a pizza themselves without anybody. Okay, there's a machine that costs about 70 to 100 grand. Now think about that. Okay, if I got to start paying that much more money, am I going to do it? And if you want just the simple formula, Okay. Just think about an average place at McDonald's. Okay. Now they make a lot of money. They're profitable, but McDonald's. Okay. So they got normally 10 people on staff. Let's say at a nice McDonald's, maybe 15. But let's just use 10. Okay. At $3 an hour extra, and I'm not going to make, I don't know what the numbers are exactly, but it's what it comes out to is about $30 an hour, which really comes out to about $45 an hour. Okay. If we're open just 10 hours, that's $450 a day. They ain't going to make it. They don't make that big a profit. Okay. So let's not be ridiculous and listen to imbeciles that know nothing about business nor the free market system, because these people are as clueless as you can possibly get. Them and the Fed belong together because what they want to do cannot be done. But if the free markets were working, then the salary structures and the pricing models would fix themselves. But too much manipulation and, of course, too many idiots commenting on something that they know nothing about. This is Bubba's Bottom Line for the week. And, of course, we'll be the rest of the week. We're leaving for Vegas right after this. And we'll be bringing you the updates from Vegas. So I'm going to my other home for the next 3 weeks. So for the next 3 weeks, we'll be coming to you from Vegas. In the meantime, have a great week, everybody. Be careful. As always, watch your disciplines and be very careful. And soon we'll have the NCAA tournament, so we'll have some more fun. Have a great weekend, everybody. As always, I thank you, and we will see you back here tomorrow with Bubba's Daily Update, but of course, and every day with the update, and next week with Sunday's Bubba's Bottom Line. Have a great weekend, everybody. Thanks.